The Robinhood IPO disclosure. So this was lodged, or rather submitted to the SEC on the 1st of January. That was yesterday. So it says here, these are the key financial institutions involved with the equity. There are many of them. So this is a major company. You have JP Morgan there, Goldman Sachs, Barclays, Citigroup, Wells Fargo, Mizuho, name it. You can literally find them on this disclosure. It says here the proposed maximum aggregate offering price is $100 million. Amount of registration fee is $10,910. So estimated solely for purpose of calculating registration fee pursuant to Rule 457, includes offering price of any additional shares and the underwriters have the option to purchase. So their mission is to democratize finance for all. Yes, interesting figures here. You can see key numbers: net cumulative funded accounts 18 million, monthly active users 17.7 million, assets under custody $81 billion, Robinhood customers who are first-time investors more than 50%, organic or referred new customers more than 80%. So this is the table of content, risk factors. So let's quickly have a look at prospectus summary. Okay, let's quickly have that look at that first one. The prospectus includes estimates regarding market and industry data unless otherwise indicated. Information concerning. Okay, so you will find this in the description box below. I don't think you'll find a lot of YouTube videos that will offer you a link to this description, this disclosure. So let's quickly have a look at the use of proceeds before we return to risk factors. So they estimate that their net proceeds from the sale of common Class A stock by them in this offering will be approximately, we don't have any figure there, so I think there's somewhere we saw that they are raising about $40 billion. Okay, so assuming an initial public offering of their Class A stock, okay, we don't have figures there. So they intend to use a portion of the net proceeds they receive in this offering to repay approximately $1 million that we expect to borrow shortly prior to the completion of this offering under our revolving credit facilities, and that I think that revolving credit facilities is probably up to $4.8 billion. Look at see what's there. The folks at Financial Times are saying. The GameStop saga put spotlight on Robinhood's financial position since it was forced to impose the trading curbs when it couldn't put up enough of its own money to back customer trades. In order to restore trading, the company scrambled to raise $3.5 billion in convertible debt in a matter of days. The company had amassed $4.8 billion in cash and cash equivalents on its balance sheet as of the end of March 2021. The prospectus shows. In April, it also secured a $2.2 billion revolving credit line that can be used to finance margin loans and other trading activities. So I think this is the exact figure, $2.2 billion. That is the revolving line of credit they talked about here. That's it. That's the revolving line of credit. Okay, that's on our revolving credit facility to fund their anticipated tax withholding and remittance obligations of approximately $1 million. Okay, so they also intend to use the remaining net proceeds they will receive in this offering for working capital, capital expenditures, general corporate purposes, including increasing their hiring efforts to expand their employee base, expanding their customer support operations, and satisfying their general capital needs, including capital requirements imposed by regulators and SROs. We'll find out what that exactly means again. And cash deposit and collateral requirements under the rules of the DTC, NSCC, and OCC. These are, I think, the DTC. There's something, they're involved in clearing, I believe. Yes, they're involved in clearing. Yes, yeah. So let's move up again and see whether we can find the risk factors. Okay, these are the risk factors. Yes, these are the risk factors in investing in their stock. Yes, anytime I see a risk factor written out, I tend to know it. Yeah, these are the risk factors. So yes, like I said, you will find the link to this in the description box below, so that you can digest all of this on your own. So let's see whether we can see cash flow analysis. We have to go all the way up, all the way up, to find that. Yes, we're here now. Let's see if we can find a cash flow statement. Okay, another interesting thing, I think there's dilution. That will definitely occur without any doubt. If it doesn't occur anytime soon, it will do so in future. Let's see whether this is where we're going to find the financial statement, index to consolidated financial statements. Okay, consolidated balance sheets. Okay, assets, no. Okay, current assets, cash and cash equivalents, end of 2021 is this is in thousands, so we are looking at $1.4 billion, and cash and securities segregated under the federal and other regulations, $4.914 billion. So other current asset, total current assets is $10.872 billion. Total assets is $10.988 billion. So current liabilities, total liabilities is $8.864 billion. So let's see consolidated statement of cash flow. Yes. Okay, net operating activities, net income or loss. 2019 it was a loss. In this current year it's a net income of $7.4 million. Adjustments to reconcile net income, loss, net cash provided by operating activities. So we have net cash provided by operating activities is $1.874 billion. So net cash used in investing activities is $32.3 million. So cash and cash equivalents, segregated cash and cash restricted cash at the end of the period is $6.189 billion. Yeah. So interestingly, yes, this guy's here at on Financial Times. They've covered, they are broken it down for us and says so they are facing a lot of investigations, and a lot of them that you probably don't know, from regulators and the state regulators, national regulators, federal regulators. So that they're facing quite a lot of them. People, there's a 50 person, the number of class action lawsuits is about 50 so far. I think they are suing against the loss of trade, when the trades were halted and all that stuff. So I think it says a cryptocurrency trading proved lucrative for Robinhood during the recent boom, commanding a growing slice of its business. The company said crypto leapt to account for 17% of revenue in the first quarter, up from 4% just in the quarter before. Customers traded about $88 billion in cryptocurrencies through Robinhood in the first 3 months of this year, 2021. Okay, payment for order flow, that's the controversial issue there. Robinhood's core business relies on controversial practice known as payments for order flow. The brokerage sells customers trades to market makers such as Citadel Securities, who in turn promise to execute the trade at or at better than current prices. So in 2020, they made $720 million selling customer trades, accounting for 75% of its revenue. That portion grew to 81% in the first quarter of this year. So, what other thing again? Average revenue per customer is $137. Yeah. So you're gonna find this link, the link to this disclosure in the description box below, and we'll see how things go. We don't exactly know what their ticker is, so let's go up and find that ticker for you, and you'll find it also. You can also, hopefully, if we find it, you would have seen it on the title of this video. Let's see. It should be in this disclosure. The ticker should be in this disclosure. Let's see. Let's see whether we can find it, whether there's whether they disclosed it or not. I know you propose it to FINRA. You propose it to FINRA, or you walk along with them or something like that. Let's see. Let's see whether we can find anything like that. It seems okay. So this is RHM, a fiscal. They use, and we use the term RHM to refer to only Robinhood markets and not its subsidiaries. We have also, we refer to our users. Okay, so it might be fair to say that this might be the ticker, but we're not sure. We're not sure if it's the case, RHM. But in any case, though, thank you very much for watching this video.